Hi, welcome to this week's segment of OWA Live. I don't know what it is, but happy Bowtie Tuesday. I seem to only record these things on Tuesdays anymore. And look, today is a special one because I'm wearing my New Mexico United bow tie. They got a game as of Tuesday. I guess this isn't going to be released by then, but good luck to New Mexico United. Let's hope that they do well. We wanted to build off of the discussion that Lynn provided last week. He talked about the basics of life insurance. We want to talk about the basic implementation of life insurance today. So there are four main reasons that we see people buy life insurance. Reason number one is because they have considerable debt. The thought here is if you pass away, you don't want to saddle your spouse with that debt. So you want to make sure that you've got enough insurance coverage to cover whatever debt you've got out there. So if you've got like a home, or if you have student loans, home mortgage or student loans, or any kind of debt like that, you want to make sure that you've got insurance enough to cover that. Now the thought here is you're not going to be in debt for forever. So you probably don't need the insurance for forever. Finding a term policy that covers the life of the debt is usually enough to get everything all squared away, and that's usually what we'll suggest in this space. Reason number two is because you want to replace lost income. If I passed away, I wanted to make sure that Lindsay could continue to pay bills and things like that. Without my income there, she'll need some additional money to be able to pay those bills. That's best done through life insurance. And specifically, we'll usually recommend group term for this kind of coverage. You only need that insurance for as long as you're working. The moment you stop working, the group term coverage goes away, but your need to replace lost income kind of goes away too. So you don't usually need the income for longer, or the insurance for longer than your income need there. For some individuals, they may not have group term through work, so we may want to look at setting up some kind of term policy that matches however long it is that you're going to continue to stay working. Number three is legacy planning. Lynn mentioned last week that life insurance is one of the only benefits that goes tax-free to beneficiaries. You buy life insurance for those that you love. For legacy planning, this is something that we want to use life insurance for as well. So if your goal is to gift money to children or to charities or some kind of institution, using a legacy plan can be a very smart way, and using life insurance to fund that legacy plan can be a very smart financial thing to do. You don't want term insurance for this. That's the wrong type of insurance, because with term insurance, we don't know how long we're going to live. We don't want to take that gamble. So we usually will recommend you should look for perm insurance or permanent insurance to cover that spot. Reason number four that we see a lot of the times is for final expenses. I don't really believe in this. A lot of people buy life insurance policies to put them in the ground. I'm not so much a fan. So I usually recommend that you just have this money saved up in your savings account. Have enough saved in your checking or savings account to put you in the ground. I don't know what it costs nowadays, somewhere between, I would guess, $5,000 and $15,000, depending on what you want to do. Make sure that you have that $5,000 to $15,000 in the savings account. And in my opinion, don't use life insurance specifically for that. Now I want to share one other quick concept. Specific when it comes to debt. So the thought here is if I've got a 30-year mortgage, I don't need that debt coverage all the time. Let's just say that I have $300,000 in debt. And I've got that's my home mortgage, let's say. That's a 30-year term. I'm paying that debt down over time, so I don't necessarily need all of that insurance coverage. So one clever way that I could do this is to create what's called a wedding cake approach. We have three tiers on this cake. Each one is $100,000 of insurance. This is maybe a 10-year term. This is a 20-year term. And this is a 30-year term. This will be cheaper than buying $300,000 of 30-year term insurance. And usually this will work a little bit better because it will, after 10 years, this top layer expires. Well, we probably have our house paid down $100,000. We probably aren't going to owe the full $300,000 at that point. After 20 years, the second layer is gone. 30 years, we've got everything paid for, everything is done. This is a cheaper option to get the same level of coverage, again, specific to cover debt. One of my favorite clients that I sat down with, he's a little bit younger, he was saying, I know I need life insurance, but I don't know what approach to take. Well, it's good to think outside the box and look at some of these other strategies to make sure that you aren't overpaying on the life insurance that you have. Life insurance is a very good thing, Don't want to discourage anyone from buying it, but make sure that you've got a very good approach. Just like anything in your financial life, make sure that you have a very good approach and that you're using the right tools and not overpaying. Thank you for joining us for this week's OWA Live. Really appreciate you guys watching our videos. Don't forget to like and subscribe to our channel, and we'll look forward to seeing you next week. Thanks, take care.